Hey, there we go again. Hey guys, Tom Gentile. Welcome to the live stream today, Tuesday, Tropical Storm Tuesday. Hanging out with me here. I am just outside of Sarasota, Florida. The sky's getting dark. It's coming. Anyway, glad to have you guys hanging out with me today. Got a lot to cover. Did you miss me last week? I was out. I was actually out. It's amazing the extremes that I've done in the last week. So last week I was in Oregon during that 115, 120 degree temperature range that we had. It really felt like I was standing on the sun at times. Then I come back here only to get ahead of the tropical storm, which looks like it might be a hurricane by the time it hits Tampa later on this evening. But anyway, glad to have you guys all here. Hey, welcome to Tom's Trading Room. If you're new to our channel, welcome. Glad to have you. We do things a little differently here than most of the other live streams. I'm not going to sit and I'm not going to look at charts all day long and look at stuff going up and down. You're not going to hear me get all emotional about a stock like an AMC, a meme stock, NEO, some of the day trading stocks that are happening today, because emotion doesn't equal profits. At least in my world, it doesn't. What we do is we have a threefold approach to trading, and that is number one, spotting opportunities. And these could be seasonal, they could be technical, they could be fundamental, they could be a combination of each. They could be even more than that, but they have to be objective, that are rules-based. Number two, we'll look to find alternative ways to trade other than simply buying stock, right? Sometimes it means buying stock if it's a $5 stock, but if it's a $3,600 stock like Amazon is quickly approaching, then perhaps we look at options as an alternative to trading the stock market. And then finally, what we do is a approach where we plan, execute, and manage those trades. So glad to have you guys here. Let me get through real quick before I continue on. Got to get through the housekeeping real quick. Disclaimer you see on the screen. You can pause the live stream right now and read this in its entirety. I'm going to mention two quick things. Number one, stock options and crypto trading. They have large potential rewards, but they also have large potential risk. And number two, I'm not your money manager. I'm not your investment advisor. Or I'm simply here to show you how it is that I spot opportunities and create alternative trades. So that being said, let's take a look at what's going on out here in the board. Hey, Sisters, Oregon. Greg, I was in Sisters, Oregon last week. In fact, I went up to White's Creek, if you know where that is. I spent the night up at White's Creek. Really, really cool. I mean, it was amazing that the weather outside was 115 degrees, and that creek felt like it was 40. That was two extremes right there on the banks of White's Creek. And so Sisters, Oregon, very, very cool town. Loved it. Guys, thank you for checking in. North Florida checking in. I see Adrian's checking in from Atlanta and St. Augustine. John, are you catching any bands? I'm seeing bands that are popping up in the Orlando area a little bit there. Anyway, stay safe for those of you that are in the path. I'm pretty lucky here. I've got a generator. I've got natural gas generator, so I won't lose power, but that doesn't mean I won't lose internet access. So the power would go off, come back on, generator kicks in, but I might not have internet access sometime later on today, but going to be here until I do. All right, so Charlotte, North Carolina, Houston, Orlando, glad to have all of you sitting in with us here today. Let's go ahead and get into, let me talk about what I'm going to cover here today with you guys. So, big things. I want to do a market outlook for July. All right. We had a good June. For those of you that have been coming and hanging out with us, we were talking about the markets being poised to move higher in June, which they did. We talked about, I know I did a USO trade here with everybody in June. I actually took that off this morning, all right, because of the pop in oil, and then that happened last night because of the OPEC deal. So that was number one. Number two, we're behind the 4th of July now. So how much higher is oil likely to go? I might be wrong on it, but the seasonality tells me that we're in the midst of the turn. And then number three, that sell the news off of OPEC and sell the news off of the storm that's coming into the Gulf, even though it's really not in the Gulf. It's really hugging the west coast of Florida. So right now, nowhere near the Gulf of Mexico, and more importantly, New Orleans, Mississippi, Louisiana, the Henry Hub, which is where all of our gas distillates go through. So that's kind of a non-event too. And I just see a lot of that as a sell the news type of opportunity going on with oil. So I want to talk about the last thing I want to cover too. We're going to get into a lot of stocks. Amazon hit all-time highs today. I see AMC kind of popping and dropping again. We've got Elsa on the move. We've got, and then I want to do the rinse and repeat strategy with you on Amazon, just to show you guys what it looks like now. All right, so a lot of things I want to cover with you. So let's switch screens here. Let's get to the to what's important on the screen. I'm going to flip over, and we're going to start with the stock market. Let me just mention this real quick before I begin into the charting. All right. First of all, once again, welcome everybody. Hey, do me a favor. If you're coming on right now, do me a favor and like the channel. Hit the like button down at the bottom of this particular video. It really does help support the channel. And also, if you have anything you want to discuss in here, especially a stock, all right, I have time today to go through a few stock patterns. And we're going to look at stock patterns today. We're going to look at Fibonacci. We're going to look at what I like to call the 40,000 foot view. All right. The stock chart itself. What are the options telling us on the stock? And where are we in the Fibonacci range over the last 100 days? That's what I'm looking at doing. All right. And we will be looking at gold, Angela. We will be looking at gold today for sure. All right. It's part of what I'm going to be looking at right now. So let's take a look at SPY first. SPY, and I'm going to go ahead and update this because I was looking at this morning. And as you can see here, we got a bit of a reversal here. We started out on the high side. We've been dropping ever since. There was some purchasing managers info that came out today that really didn't bode well for the markets, and the markets dropped off a bit on that. But you look at the long-term things, going back to the beginning of March, that's where the lows were for the year. The lows came in around 375 on the S&P. Let's put the big button on the screen. Bam, there it is, 370, 375. From there, we've risen up into Friday. Friday was the all-time high, just kicking in there around the 434 level. We're getting a little bit of a pullback today, but pullback numbers look like this. If we're going to pull back, 411, 405, 398. That's the 38, 50, and 61.8% retracements. I'm looking at them right there on the screen with you. All right. So we need to pull back. This is the very first area of what we call Fibonacci pullback. All right. For those of you new with us, that 19, that is not the price of SPY. Get to that in a second. SPY numbers are over here on the left. Okay. So we see SPY coming off of 434, and we're down off that high. The lows that we had for the year were down here just around 375. Now, all this red on the right-hand side, this is what option traders look at to determine whether or not the options, the calls and puts on that underlying, that SPY, whether or not they're cheap or expensive. Now, what I like to do is I like to measure them. And I got the measurements on the screen in the red line. See the red line back in March? We redlined up here in the 20s, meaning that options were more expensive back in March than where they are now. Take a look at what happened on Friday. We were down here to 8.5. Okay, 8 times 3 is 24. So I bring up that number because we were at 24 in March. We are just bouncing off of 8.5. So it's safe to say that the options in SPY are a little bit more than 1/3 the price than what they were trading at back in March. We're looking at those time values, all right? That time value, you've got 1/3 the amount of time value expressed as a percentage compared to where we were. So options are cheap. If I could just dial it down to its primitive saying, options are cheap right now. Okay, that's the 7 and 30-day options. So any of you that are looking for July pullbacks, now is a good time to be looking at those put options because they are so cheap compared to where they've been. All right. Now, the other thing I like to do is I like to look, and I'm going to spend just a few minutes on it. What's the bond market telling us? Hey, bond market's been on the rise. So if you take a look at, bonds back at the end of March, where the TLT was trading at 134, and then we've rallied, and we're rallying even today, but we've been rallying from May and into June. We've gone from about 136 TLT now to 146 we bounced off today. What is the bond market telling us? All right, two things. Number one, interest rates right now seem to be heading lower. All right, so maybe there's a little bit of an idea that the bond market believes the Fed and that the Fed is not going to raise rates anytime soon. Although there's a lot of economists out there that'll tell you Fed rates are going up a point before they go down another point. Please. If the rates went down a point, we'd be in negative rates, right? I do believe, though, that when you see this, that we're getting a buy in the bonds. The bond market is telling us right now that the stock market might actually be overdone. And you're seeing that shift in the fixed assets. Now, that could also be because maybe it was a little bit overdone, right? Now we're seeing the markets kind of pausing. We're heading into the second quarter earnings. Second quarter earnings season officially kicks off really next week. I mean, we're going to get a couple of things that pop soon, but next week's when earnings are really going to start to kick off, and we'll see that happening. Until then, let's just look at what's happened here since our last earnings season, and we've just simply gone higher in both the bond market and the stock market. Something's got to give. How about the U.S. dollar? Well, UUP, the U.S. dollar in the last couple of weeks, if you look at the month of June, UUP has certainly gone up 24.2 to 24.9. We have not seen 25 yet since you got to go back to the end of March to see 25 on UUP. Now, what's going on here? Traders are buying bonds. Traders are buying U.S. dollars. Are you kidding me? Traders are buying U.S. dollars with all the money we're flushing out there? Yes, they're buying U.S. dollars against other foreign currencies. And this is also potentially a warning signal for the stock market. Now, I have gone nowhere to show you seasonally where I see the stock market going, but right now, just looking at some technicals, there's a couple little early warning buzzers going off right now, looking at the U.S. dollars, looking at bonds. How about oil? So the oil market, I talked about this. I don't know how many times I talked about this, but we talked about oil going up from February to July. We talked about USO finding a resistance number near 50. Let's see what's happened. Well, definitely since March, we've had a huge march upward with USO going from below 40 to actually above 50. Last time I was with all of you was about 2 weeks ago. So we put ourselves back to June 23rd. You'll see June 23rd, we were topping out at 50. And we were at 50 last week. And then as you can see, Thursday was the big pop. Friday, we had a run up. Now, what happened today? Today is sell-off Tuesday because of a couple of things. The OPEC rumor is now news. All right. Elsa is not going to be hitting the Gulf, the Gulf of Mexico where the oil is actually at and coming in. Not going to be an issue. So, finally, we're running into the seasonal high. The seasonality for oil is coming to an end. So this might be a great area to look at a selling opportunity. Let's do this. Let's look at a selling opportunity in USO. I actually, full disclosure, a lot of you know that a couple weeks ago, I was long USO and I was simply going in looking at a very small spread, 49.50 spread. Right, I more than doubled my money on that 49.50 spread when I got out of it this morning. That was before the red line started kicking in. It started kicking in when I got out, but it's moved quite a bit lower since then. Let's see if there is potentially a way we can take a trade to the downside, a short-term trade. So what I'm going to do is I'm going to move over and I am going to look at options. I'm actually going to bring up another Tom's Option Tools chart. And again, folks, if you're interested in Tom's Option Tools, you've never seen this before, there is a 2-week free trial. It is in the description below this video, all right? And you can find that link to that 2-week free trial if you're interested in it. I'm just going to log in real quick. And what I'm going to do is I'm going to go straight to the option chains. I want to see the option chains on USO. All right, so USO, let's type them in. USO. I'm going to make this all big so everybody can see it. All right, now I want to make it big. So here's what we're looking at with USO. All right, these are the option expiration dates. So this is this Friday, July 9th. How about July 16th? July 16th is a third Friday option. I think that might be something I'm interested in because again, when I look at long trades, I mean bullish trades, I tend to go out, around the 30-day time frame or maybe even longer. When it comes to something I believe is going to go down, like we're coming out of this news element here with USO, then perhaps I want to do something a little short term because remember, the bull takes the stairs, the bear takes the elevator. And so I'm going to look at July 16th options. Now I'm going to look at options that are, let's look at 10% out. I think 10% out is perfect. If we're dealing with a $50 instrument, what's 10% of 50? 5. So I'm going to be looking somewhere down in the mid 40s as far as my strike prices go, mid 40s to mid 50s. Let's just update that real quick and let's see what we get. So what I see is right here, I have calls on the left. There's the price of USO, last price 49.62, and I see the 50 calls. They're 97 cents. These are July 16th. These are the ones that have a little less than 2 weeks to expiration. Now, I'm not bullish. I'm bearish. I want to be looking at puts. Here are the July 50 puts. All right. So if I were to buy the July 50 puts, and I were to purchase one of those, for instance, I'm going to be paying somewhere between $131 and $137. So what that looks like is if I go up here and I click on risk graph, what does this position look like to me? What it's telling me is one contract is good for 100 shares of stock. So when I say $1.34, I mean $134 plus any commission you might pay. Now, that's my entry, all right? My maximum profit, if USO were to go to zero on this $134 investment, would be $4,866. I'm not expecting USO to go to zero. Oil is always going to be worth something. But where do I see USO going? USO could go to 47 pretty quick. And if it does, this could be a quick double. So I'm looking at this, and I see it once again. What am I looking to do? Buy the July 16th 50 put. It's a very simple trade, right? So simple, I'm going to show you how I do it. So I'm going to go in here. I'm going to type in USO. Now, let me tell you this, guys. First of all, number one, my session's been terminated. Okay, that's all right. Let me do something real quick. All right. Let me pull that off the screen. Let me go in, put my username and password in once again. That happens if you leave these things linger too long. That's what I ended up doing. All right, so let me bring up my trade stuff. Okay, now I'm logged in. Let's bring it back into view. There we go. All right, so here, let me set up my trade. Once again, I'm looking at USO. Now, as I was saying before, I don't front run. All right, first of all, I'm going to tell you this is not a recommendation. All right, I want to show you how the process works. And number two, if I'm going to do anything in a live environment, it's going to be with a small amount of contracts with something like an ETF, where I possibly could not, or any of us for that matter, could move this market. It just can't happen. All right. So with USO, let's just say that I'm going to buy. I want to buy a put option. So I'm going to type in put. And I'm going to put a quantity in, buy to open. I'm going to put in 2. All right. And I'm looking at the 50, the 50 put. So look at that. They're 107 by 114. I'm going to put a limit order in for $1.10 for these. So that's a day only order. So I'm going to come down here where it says preview, and I'm going to preview the trade. And I'm going to look up here. I'm going to buy to open 2 USO 50 puts 110 limit order. It's going to cost me $221.04 with the commissions. And there we go. And if I hear the ding, if I hear the bell ding, I know the order is going to be. There it is. There's the ding. Took a few seconds, but someone took the other side of that trade. Now, what am I going to do after that? Now what I want to do is I want to take that same trade. I'm going to put it back up here on the board for you. USO. All right. There's my stuff. Again, it was a put. It was the July. Oh, did I do the wrong put? Did I do the wrong put, everybody? I did. Okay. Here's what I'm going to do to fix that. Hey, it's live. Can't do everything right. All right. So 716 was what I really wanted. So the 716 50 puts are trading for $1.50. All right. You know what I'm going to do? I'm going to buy 2 of those. Get this right. All right. So buy 2 at $1.50. That's a limit, $1.50. I don't want to pay any more than that anyway, because I'm looking for this to go to 47. So preview. Let's place the order. And now if I get filled on that, what I'm going to do is I'm going to go ahead and create a separate order to get out of half of that, or to get out of that. So I'm going to sell half of that order when it hits 3. The reason why is because then if it hits 3, I've taken my money off the table. I've got the other half of that position out there to see what could it actually do. All right. So there we go. All right. That's placing the USO trade. I showed you 2 ways of placing it. The wrong way, which was me going in and placing the order without looking at the actual time frame. Oh, there went the right one. And the right way, placing it with the correct expiration date and the correct strike price. Now, let me show you how I want to get out of those trades. So I'm going to place another trade. Let's do USO. Let's put the puts up there. I might as well get out of both of them. But I'm going to get out of both of them if they double in value. So the first one was I'm going to sell to close. I'm going to go ahead and sell to close both those positions because I screwed that up. So I'm going to sell to close both of those if we get to 220. That's double $1.10. 2.20. That's a limit order. And I'm going to make this a good till cancel. That means I don't have to do it every day. So sell to close to my 50 puts. And I want to get out at 220 or better. Preview. Place order. All right, that was done. Now let me do the other one. So the other one I want to do the way I intended on doing it, which was I'm going to place another trade. So that's going to be USO. All right, here we go. Puts. Again, I'm selling to close. Now remember, I bought to open 2 of these, so I'm going to sell to close 1 of my 716 50 puts, and I want to get out of one of those for $3 on a limit good till cancel order. So again, notice what I'm doing here. USO, put, sell to close, half of my original position at twice the price that I bought in for. So I'm taking my money off the table. Preview the order, place the order, and that's not going to fill today. Unless oil takes a huge move down, not going to fill today. All right, now that that's done, let's slide that over here and get it up here, and we'll come back to it later. So we're looking at USO. I want to look at gold. I want to look at FANG stocks, and then I want to look at what you have that you're interested in looking at using our Fibonacci option charts. All right. So if you haven't yet, you want to take a look at those, look at some charts with me. Tell me what symbols you're interested in. You can put them in the chat box, and I will jump to the chat box here momentarily. Now back to the charts. GLD. All right. I saw Angela or Angeline came up, and I see that the question's being asked: Are we going to continue to rebound? Now, a couple weeks ago, we were in this area here, and I was saying that we hit that 61.8% retracement. I really love to see it get above 38%. Well, we came back down last week, but we came out very quickly, and here we are at 168.82, 170.64. If we can get above and close above that, I'm going to feel really good about gold going back up and making a run for the high 170s, or GLD, excuse me. By the way, I had some signals on GLD and GOLD, which looked very interesting. And then, of course, if I were to give you full disclosure, I am a holder of GLD, and I also shorted some puts on GLD early last week. So I have put short puts on GLD as well, okay, which is another bullish move on GLD. All right, so that's GLD. Now take a look at Facebook. Now we'll get into the FANG stocks. Facebook just coming off of new highs, new all-time highs. Pullbacks look like if they were going to happen, 317, 305, 293. Let's move on. Apple got some great news. Finally is gotten out of the 120s. And really for the last month, the month of June, it's just been very kind to Apple. If you've owned Apple, if you own Apple, or if you have some sort of long option position on Apple, you got to be very happy if you've been in this position for the last couple of weeks, as it is just moving up. Again, new highs. Look at the pullbacks. If the pullbacks are going to happen, 131, 128.84, 125.89. But the fact that we moved outside of this earnings high, which, look at this, the high was back at the end of April. We needed to get to the end of June. We needed 2 months to go by before Apple finally broke free of that earnings high to make new highs just in the last couple of days. Amazon, also new all-time highs today, big push up above its earnings as well. So a lot of tech, a lot of FANG is coming back in a big way. I discussed this. I don't know if I did it on the YouTube channel, but I talked about it in some of our premium stuff that we do. And I was talking about Amazon being the one that was going to carry the markets as we got into summer. And that's indeed what has happened. I mean, there was a little bit of a blowback here, about a week and a half ago. But since then, Amazon's really just kind of cut through. Earnings on Amazon, 23 days. Netflix has earnings coming out in a couple weeks. But Netflix, for the longest period, was down here below 500. But it, too, has really kind of come out of the ashes. And now we're sitting very close to 540. We are above the 61.8% retracement. That gives us great, clear, bullish signs. And I believe Netflix is going to be up here near the 100% area before its earnings come out. Netflix should continue to make that move higher. Take a look at Google. Google. For the last couple weeks, it kept hitting ceilings, hitting a ceiling. Finally broke through that ceiling on Friday. We got some extension today. It's off a little bit today. But again, it has earnings coming out in 23 days, new all-time highs. Look at the pullbacks. I mean, we're at 25.05. I got 23.15, 22.56, and 21.97. A long ways away from where we are right now. That's Google. And then finally, before I take a look at your stocks, Tesla. So Tesla, there's a lawsuit. There's a news article that came out this morning about a lawsuit that has to do with an accident involving the automatic driving, all right, self-driving mode. And so that's hitting the news, and that's what's hitting Tesla right now. As you can see, stock is off today. Tesla not that long ago was trading down here in the fives, got up in the sixes and was as high as 700 on Friday before pulling back. We're at 655 right now. Volatility's popping up a little bit, but much, much lower than it was back in March. All right. Take a look here. We had 820 on the high. We had 560 on the low. We came up. Earnings were better than expectations. But if you remember, where did they make all their money on their last earnings report? I'm going to tell you where. It was in Bitcoin. All right. The amount of money they made in Bitcoin trumped all the sales and revenues generated from all of their electric products. And I think that's what caused this to drop. It's going to be very interesting to see in 15 days what their earnings look like now. Now that Bitcoin is no longer in the $60,000 range, it's down in the 35s. It's nearly half. That's going to take some of their earnings potential away, or maybe take, if they had open positions on Bitcoin and they did not sell them, if that converted into a pullback for the second quarter. All right, that's Tesla. Hey guys, if you're just joining me, I want to thank you for being part of the live stream. Thank me. You can thank me by hitting that like button below. And also, if you're brand new, subscribe, ding that notification bell, and then you'll get any of our videos and updates that we put out there on a timely basis. I've got a video coming out this week. It's either going to be, it's probably going to be tomorrow. And it has to do with, so I'll tell you the quick story. I was leaving the house, and the landscaping team that cuts the grass, they chopped up a big piece of pipe. I saw it in the yard, and it looked like an exhaust pipe. It was either with my HVAC. I don't think it was any kind of water plumbing. Anyway, this thing was it was mangled. I'm looking at it, I'm thinking, what did this used to go to? And how important is it that I plug this hole before the tropical storm comes in? So at 8:30 this morning, I'm at Ace Hardware, and I've got the mangled piece, and I'm the plumbing guy, and I go, I need to recreate this. And I kind of knew what I needed, but this guy put the whole thing together for me. He put the elbows together. He put the whole piece together. I asked him not to glue it together because I needed to figure out how it fit in the ground, and I'd take care of that. But he made a whole new exhaust manifold for the house. So at 9 o'clock this morning, I'm digging in the side of the house, and I'm putting this thing back in, and I'm burying the dirt, and it looks pretty good. So before 9:30, back in the office before the opening bell. What I'm telling you is that I was able to fix this problem without a plumber, without waiting, because there was no way I was getting one today, without the expensive cost of a plumber. And so I thought I'd take this week's video and show you how to fix a broken stock without adding any extra cost to the trade or any extra risk. How do you take a stock that you bought that's come down? How do you fix that without adding additional cost to it? Well, check out this video that I got coming out in the next day. It's going to show you how. If you're not a subscriber, you might want to subscribe, and you might want to ding that bell so that you get that video when it comes out. All right, let's move forward. Let's see what we got going on here. Please talk about Amazon again. Thought it would go down after Prime Day. Backyard, it absolutely did go down after Prime Day for literally 1 or 2 days. And that's what we were looking at. We were looking at that buy the rumor, sell the news. And that was a very, very short-term event that happened 2 weeks ago. All right. What we looked at last week in Amazon was that for Amazon, longer term, for the markets to make new highs, it needed to be tech-weighted. It needed to be new age and even social media weighted. And that's what we've seen happening there. Right. So let's see that. HD. Yeah, Home Depot is very good at that, too. You know why I didn't go to Home Depot or didn't go to Lowe's? Because that would have meant a trip down into the belly of the beast. And what I mean by that is getting on the interstate, going down a couple of exits when the local Ace Hardware was only a mile away. So I chose to chance it to go to the local hardware store, knowing they may not have had everything. But so anyway, guys, let's see what we got going on here. I'm looking. I'm kind of going back a little bit. There's no way I'm going to get to all these stocks, but I'm going to get to as many as I possibly can. Let's start with Ryder. Ryder, do I see you? I want to talk about Disney. What? So, well, would I sell 50 shares of LKCO for 1 share of Disney? Don't know. That's one that kind of puts me into more of an investment advisor piece. But what I can do is I'm happy to bring up both of these, and we can take a look at them as far as bullish to bearish. So LKCO, is that an optional stock? Because if it's not, I don't trade those. So let's go ahead and take a look at Disney. Symbol is DIS. Disney is, fundamentally, Disney's kicking it right now. I mean, they are kicking it on all cylinders with Disney Plus. It's amazing. This is becoming almost a value play. And so what you got to do is you got to look at this and you got to think to yourself, long term. This is more of a long-term investing chart. And by the way, Ryder, I'm going to write down, let me put it on here with my TTR pen, DIS, because I'm going to be looking at that for my own portfolio because I don't have Disney. I haven't had Disney in quite some time. I've been waiting for a better position to get into it, and this is looking pretty good. So I'm going to be looking at some sort of potentially put selling strategy to acquire Disney at a lower price than where it is right now. maybe try to get it around the 165, 170 area. That's what I'm looking at doing. All right, let's see what we got here. So, by the way, thank you very much for the comment. Let's see. Turd Ferguson. I feel like Alex Trebek on Saturday Night Live. Turd Ferguson says, buy and hold established companies with strong dividend yield, track record of profitability, and rolling drips, hands off and hold. Yeah, absolutely. And you know what? I want to talk about this for a second. So what Mr. Ferguson is saying is he's talking about a long-term investing strategy. And I do that. I absolutely believe in that. And by the way, I take it one step further because for me, I have some of my long-terms in the public stock market. I have some of my long-terms in private investments, all right, that are fixed income investments. I have some of my investments in real estate. I have some of my investments in farms, all right, because I believe that that organic farming is going to be something that is going to be needed more and more. In fact, we were actually talking about water not too long ago because of what's happening in California, Oregon, and the Northwest. That the fires are coming again, the droughts are happening big over there, and that I think I saw an article that the smell in some of the water systems, although the local governments are saying the water is fine, it smells of a type of sulfur. And that's what happens when your water levels get real low and you start taking water from the bottom of the barrel. It starts to have that little bit of an odor. That tells me that water could become something that could become an investment, a long-term investment down the road too. So thank you very much for the comment, Mr. Ferguson. Let's see what we got going on. QMS. Always good to see you here. Verizon, let's take a look at VZ. VZ is a dog, I believe that was one of the dogs of the Dow, VZ, and it's been really not performing that well at all of late. I mean, we were as high as 59.50. This was back in May. We're back down to around the 56 level. You know, if you take this one out a little bit longer, you really have that 50 to 55 area is long-term support. But this is one that also comes with an above average dividend. So it depends on whether you're a trader or investor. If you're a trader, it doesn't look like a tradable instrument to me. I don't have any buy or sell signals on it. But as an investor, this one is an interesting play because it is communications. It is long-term. It's a dog in the Dow. And it could be another one of those sell put strategies long-term where you're able to acquire the stock price at a much lower rate. Now, if you want the dividend that comes with it, then perhaps covered call selling might make more sense, buying the stock and simultaneously selling calls to help bring some insurance in on a further devaluation of the price. So QMS, thank you very much for your comment. Let's see what we got here. Is that right? Am I reading this right, Tony? Zoom. Zoom. ZM is the symbol. Not for those of you looking, it's not ZOOMMMM. It is ZM. All right, is the signal for Zoom Technologies. And here is Zoom video communication. Excuse me. Zoom is zooming back up again because what happened was as the economy opened up, there was some reason a lot of folks thought people are going to get out of Zoom and they're going to start getting into real, get on flights again, start going back and forth again. Working face-to-face, seminars replace webinars. And I think what folks have found is that's not so much the case, especially businesses that have now realized that using Zoom and using face-to-face technology is going to save them millions of dollars in travel, hotel costs, and efficiency. Efficiency goes through the roof when you do that because you don't have an employee or an executive away for an entire week doing meetings. When they could handle these meetings, these 1 hour meetings. Think about this. If you had a meeting in 5 different cities over the week, you're in Dallas, you're in LA, you're in San Francisco, you're in Chicago, you're back in New York. Those 5 meetings, that's 5 flights, that's 5 hotels, that's 5 meals times 3. That's 5 of a lot of things to make 1 or 2 hour meetings. When you could do those 1 or 2 hour meetings on Zoom and you can have them all locked up in one day, not 5. People are realizing that. Zoom also had a great first quarter earnings that came out. They don't have earnings for another 56 days, and the stock has been on a climb since then, moving from 320 back up to 400. So Zoom looks very zoomy, and I would say that 451 level, that's a takeout target. This is an expensive stock. The options are cheap, relatively speaking, but they're still going to be expensive. This is one of those ones where you know call spreads might make the most sense going forward. So, Tony, thank you very much for the request on Zoom. How about NVIDIA? Carlos, nice picture, Carlos. So NVIDIA, and let's take a look at that one real quick. And so if you take a look at NVIDIA, same thing. I mean, you're talking about low to high right now. The low was back in March, and the highs, we're hitting these highs right now. So, Carlos, all I can say is that this one looks like it is an event that if you take a look at where we were in March, 450, and where we are 800, 850, July actually looks like a pretty good month, at least the first couple weeks of July. So this one could round number up to 900, maybe 1,000. Don't know. All I can say is the trend is your friend here. If we are going to see pullbacks, we're seeing pullbacks at 686, 644, and 601. All right. Thank you very much for the comment. Andrew says, how about Sava? Sava, S-A-V-A. Now remember, if it's not optionable, I ain't touching it. So Sava is Kazava Science. Yes, it is. Now take a look at this one. This is another one where the trend is your friend, and we're at some resistance right now. Support was down here at 32. Resistance hit 90 and hit 90 again and hit 90 again and hit 90 again. And we've got to get above and close above $90.97. If it can do that, all right, which is really where it is right now, it closes where it is right now, then we see the 100 mark is what you got to look at next, because that's round number resistance. Okay, how do you trade something from 90 to 100 and actually make a few dollars? Again, look at the options. They got to be liquid, right? And then we'll say, where are we now? 90, 97. Where's our target? 100. And we try to find an option trade within that time, that price frame, here in the month of July, that makes the most sense, that has the least amount of risk, that can give us the most upside. All right, Andrew, thank you very much. Let's see. Terry, CELH. Let's take a look at CELH. CELH. And again, I'm going to try to roll through these as quickly as I can, but there's a story behind some of them, so it might take me some time. The story behind Celsius Holdings is it nearly double bottomed here between the end of March and the middle of May. Then we had this kick up after earnings that took us up to 81.94. I don't know what happened here between the big drop and the gap, but we held 62.26. Now we've come up, we're in an interesting area right now with Celsius Holdings. And the area that I'm talking about is that we've already filled this gap. So this is one that's tradable. It's really hard to tell because we're not making new highs. We're coming back off of this gap fill. It looks to me like 66.90 might be retested before we see a retest of the highs up here at 82. Terry, thank you very much for the comment. Let's see what we got here. Mac, you got something that I'm interested in looking at, because this was actually on a buy signal I had, and that is AUY, Yumana Gold. Now, this one's a little tough to look at because when you see GLD has a different chart than Yumana. And I'm actually looking at Rand Gold too, so I'm going to throw that one up on the screen as well. But if you look at Yumana, 4 became 540, dropped back down. We're down here around 423. And I started seeing some long signals in this space. This is one, I got to say, I'm not an option trader on something that's a $4 stock. I would go forward and look at buying the stock. And of course, there's your stop right there. We closed below 401 out. All right, what would I be looking at for an upside? 487, which would take us through the 38% retracement. And that would be a good reward to risk ratio right there between what we stand to lose and what we stand to make. Let's bring up GOLD while I'm at it. And this is Randgold Resources. Now, take a look at Randgold. It has a lot of the same characteristics. It didn't get so steep on the drop, so it is stronger. But again, these gold mining companies, you know where they make their most amount, where they get their most amount of takeoff? When gold's making new highs. That's when you want to pile into these things. When gold's kind of flipping around, these tend to bleed off a lot more, and we've seen that happening with AUI, Yamana, and we're seeing that happen with Randgold. But if you're long gold, if you like gold, this is a great area to go into because the alpha, the amount of percentage return on these when gold does start moving higher, is going to far exceed that of GLD. All right, Mac, thank you very much. Appreciate it. And I am running through here as much as I can. I'm going to miss a few of you. I apologize. Jacobus, we looked at Apple already, so let's go ahead and look at, Joe wants to look at Tilray. Tilray, T-A-L. You know, this one used to be, Tilray used to be the one that was like the meme stock before stocks were called meme stocks. And you can see Tilray, which is, it's just literally been all over the place. Remember it was a $100, 100 plus stock a couple years ago, and then the thing ran down to below 10, then it ran up again. Now it's run down again to the 15 level. It came up. Here's what's going on with Tilray. I hate to tell you this, but as a technician, I feel like I have to. 35, 15. We could not even get above the 38% retracement at 2168, and it looks like it wants to roll back over again. This stock will be below 15 before it gets back above 38. That's what the technicals are telling us. Gets down here around the 14, 15 area, then it looks like an interesting value play if you like the space. All right. Thank you, Joe. Appreciate it. And, you know, kind of moving on here, there are so many other stocks I could get into right now, guys. I would love to just do this all day long, but I simply can't. I've still got to finish prepping for the potential hurricane, the tropical storm potential hurricane that's coming. But I do want to say this, Lauren, thank you so much for your super chat donation. And again, you're welcome on the USO and the AMC Hour and Condor. And you know what? You bring up a very interesting point because I want to mention two quick things. Number one, we do have Super Chat open, guys, for those of you that want to donate to the channel. All right. And so I will mention this. All of our Super Chat donations, among all of our profits to this channel, they do go to charity. All right. They do go to charity. We donated thousands to a charity called LBX Sports in New York, which helps underprivileged youths. And we're very excited about that. And I told you, I think this month we're looking into St. Jude Medical, and I'll let you know what we end up doing as we get to the end of July. But you know what? I can't do that without you. So as you're donating to our channel, what you're doing is you're donating to various charities that we support throughout the country and the world. So thank you, Lauren, and thank all of you that do watch our show and obviously donate through Super Chat. We are very excited and honored to have you do that. So as I move forward, guys, let's take a look at AMC. All right, let's look at AMC. And I want to look at AMC for a reason, because I want to do the rinse and repeat strategy with you here until it no longer can be repeated. AMC, take a look at it here. Here we go. So AMC, forget about what's going on down here. Down here it was a $10 stock, all right? I'm not interested in the last 100 days. I'm really interested in the last 30 days. Let's bring up the 30-day chart. That's going to widen us out a little bit. There you go. Okay, so there's a range that's going on in here. And the range since Memorial Day, low was 15, high was 70. That big move right there, you saw that happen in 10 days? If that happens, it's likely going to happen, I hate to say it, it's going to happen to the upside, because there's just so many retail traders that are holding this stock up, no matter who wants to short it. The shorts just keep getting, getting churned around. And the longs do too, for that matter. So what I like to do is think about this as a hurricane strategy, all right? So we have tropical storm / hurricane Elsa that's going to be marching up the coast, the west coast of Florida. Would you rather be on the west coast in a boat on Longboat Key, or would you rather have your boat docked in Fort Lauderdale on the other side of the state? Maybe get a little windy over there, maybe get a little rough seas, but it's going to be nothing compared to what's going to be happening in Longboat Key, in Tampa Bay, in the Tampa Bay area, because it's going to get rough there. So I want to talk about, again, a strategy, and I'm not going to get into details because I did a video on this a couple weeks ago, so you can see the video for all the details. But what we want to do is we want to trade an option strategy that stays away from the churning that's happening right here in between. We're going to call it the $45 and $62 to, let's say, $40 area. That 40 to 60, 40 to 65. So what can we do there? Okay, can we do a 3-day trade? I don't know yet. I haven't even gone in and looked at it yet. But let's look at it now. So what I want to do is I want to go to an option chain on AMC. Now here's our options for AMC, and here's the expiration, which is Friday, July 9th. All right, so I'm going to look at options that are, and we've got to go up and down quite a bit. So I want to go 30% above and below today's stock price. That's going to put us about 12 points above, 12 to 15 points above, and 12 to 15 points below. Here we go. There's your stock price right now, 52.30. These are the call options. And see the 53s all the way. I've got it going all the way to 67. Look at the 67 calls. They're 48 cents. Okay. What about the 65s? 53. All right. So what I'm looking to do here is I want to be the insurance salesman. I want to sell insurance. And I'm looking for buyers, but I'm also going to protect myself too. So if we come down to the $60 area, and let's say I want to sell that 60 call. That 60 call, I could sell that. I'm going to get 86 cents for it. Now, before any of you pipe up and say, you can't sell naked calls, Tom, my broker won't let me. We're not selling naked calls. We're simply selling that call. And what we're going to do is we're going to buy, and this is, again, examples, not investment advice, not a recommendation, but I'm looking to buy some protection. So I'm going to pay 53 cents, and I'm going to get 86 cents. So what am I going to get in between if I do this trade? Let's come down and let's go ahead and put a risk graph on it. Let's see what the risks and rewards of this trade look like. So I'm going to bring in $33, but look what I'm risking, $467. I don't know if I like that trade. Can I get something a little closer that doesn't put me right at the cusp of the problems? I don't know. Could I add to this trade? Could I, this is the bearish trade. How about we just look at the bullish trade? Let's go back and look at the bullish trade. So here we are once again, and we're looking at AMC. I'm going to clear this out. I want to look at the puts. Now, the puts, remember, the stock's trading at $52.30. If you are looking at this, you're thinking, it doesn't look like it's going to go below 45. Perhaps you sell the 45 put, and maybe you buy the 40 for protection. What is that going to bring in? Let's look and see. So that's $32 with a $468 risk. How do you risk so much? Well, again, take a look at the trade, and I'll share with you what happens here. As long as we stay above 45, the 45 put expires worthless, and the 40 put expires worthless. So both of those go down. They go down to zero. Since I sold the 45 put, I take 53 cents in. If I bought the 40 put, I'm going to lose 21. But net, I gain 32 cents. If the stock goes down below 45. And as it trades below 45, this is where my risk comes in. And I have a maximum risk if it trades below 40 by expiration. So if it's below 40, let's say it's at 35 or 30 or 25, for every dollar I'm gonna lose on one side, I'm gonna make on the other. The difference between strikes, that $5 minus what I brought in, 32 cents. That's where my risk is. So you might look at this and say, I only stand to make less than 7% on this trade. Yes, you do. In 3 days. Now, there is something else we could do. We could elect to possibly do both. And do both, by doing both, I'm talking about on the call side, all right? We buy that 65 and we sell that 60 while still having the put spread on too. What's this trade going to look like? This is where we're being bullish and we're being bearish at the same time. Now, this trade is going to bring in, because you're doing the call spread and the put spread, you bring in $65. So your risk is only going to be $435. Still $435, right? What are we risking? We're risking about 6 to 7 times what we're breaking in. So you have a potential of making almost 15%, but you have a potential risk of losing up to 85%. Now, how do I determine whether this is a good trade or not? Well, I want to come down here first. I look at the IV, and I know the option premium is still crazy. But what I'm really looking at is something we call statistical probability. What does the probabilities look like that this is going to remain in its range? And when you look at this, 2 days to expiration, it's saying we have an 87% statistical probability that AMC is going to be in between 60 and 45 and 60. It's likely as we get down to that 0 days to expiration, says we have a 98% probability. That's fantastic. There's still that 2% chance it can jump out one way or another. But 98% probability of keeping that $65 credit. That right there is potentially interesting to me, right? Now, I do these. I've been doing these every week. And if this one doesn't look that good, the other thing you could do is you could simply go out. Let's clear this out real quick. And if you think that was a little too close, what about the expiration of July 16th? What if we looked at the July 16th options? Let's just update that. And let's see if we can get something that has a little more reward and a little less risk. And that's what we're looking at doing. So again, the put side, take a look at the 40s. All right, so the 40s, we buy the lower and we sell the higher. So the 40-45s. Looks like we're going to take in $1 right there, a little more than $1 on that side. That looks pretty good. Let's see the call side. So the call side, remember, we're going to buy the higher. So that 65, oh wow, the 65 call, where's the 70 calls at? 65 is 206. The 60s are 286. So we're only going to get 80 cents on this trade because, again, all the volatility looks like it wants to swing to the upside. But if we bought the 65 calls and we sold the 60s and did that with the out-of-the-money puts, what's our reward risk strategy look like now? And, of course, our probabilities, we got to look at that too. So now we bring in $187 and we're risking $313. So we're risking a little less than twice the reward. So it's like a 1 to 2, a 1 to 1.8. You make 1, but you lose 1.8. This might be a little bit easier to stomach if the probabilities look good. What do the probabilities look like? Come on down. There they are, 88%. So there's an 88% statistical probability that AMC is going to be in this range we're looking at a week and a half from now. That's a better looking trade because it has a better reward to risk ratio. And it gives you a little more time in case that things go wrong. It doesn't become a total loss. So there you go. So this particular example, and again, it is just an example. It is not a recommendation. It's an example of how to put these trades on, involve this particular trade right here. We were looking at the July 16th options. And I'm looking at the case study, buying the 65 call, selling the 60 call, and then on the other side, we're buying the 40 put, selling the 45 put. This is referred to as an iron condor, right? For those of you that are new to premium selling strategies, iron condor is what we're looking at there. All right. So there you go. Let me take a look and see what we got going on with our chat box here. And guys, let me mention this before we continue on. For those of you that are hanging out with me for the first time, do me a favor. If you're here for a first time or you're a veteran, do me a favor if you haven't done so already. It really helps out the channel. Hit that like button right now on our live stream that we're doing with you today. It does help support the channel. And if you subscribe and you ding that notification bell, then you get all of these videos and live streams as they're on. Video this week we're going to do is talking about fixing broken stocks. I have a podcast that's going to be coming up late in the week with my guest, Chris Johnson. He'll be back. I'll be back. We'll be podcasting once again. Let me show you something real quick before I finish up on the day. I didn't get a chance to get into this, but let's move over cryptocurrency real quick. Bitcoin, really looking, I've said this here over the last month that this is an inflection point that we're seeing right down here in this 30,000 to 35,000 area. I really want to see us get above that 61.8% retracement level at 43. And I just feel like if it doesn't happen soon, that we're going to enter more and more of one of those 3-year cycles that we saw in 2014 high to 2017 high to 2021 high to, 2024. And so, that only tells me as a long-term holder of Bitcoin and Ethereum, et cetera, that it's just going to give me more time to bulk up and average in on a long-term strategy. As far as the stock market goes, this is the money calendar for July. Take a look at this. So here's the first week of July. We're the 6th right now. The 9th is this Friday. Take a look at what happens. We've got a good week and a half to 2 weeks of bullishness. Earnings start to come in. And we see this happen every second quarter where the earnings start to come out and they look good. And then as we get into the end of June or the end of July and into August, things start to turn sour because earnings have not performed as well, or we get this sell the news event. So this is what I'm gearing up for right now. I'm getting a little more selective on my shorter term trades. I'm taking profits where I want to on my longer term stocks. And I'm getting ready for a potential, not a guarantee, but a potential pullback as we head into the end of July, as you can see here. All right. So, Ken, I do a lot of crypto stuff. I do a lot of crypto stuff. Thank you very much for your comments. Are we going to talk about crypto today? I do a lot of crypto stuff. Let me just look at crypto one more time for you. I'll just do 2 more real quick. Let's just take a look at Ethereum. All right, ETH. That's another big holding I have. I invested quite a bit into this one last year around this time, and Bitcoin. And even though we've gotten pullbacks, I'm still up extremely well on both of those trades. Here is ETH. ETH is the stronger of the two. If any of you have been following me on this one, my average in on Ethereum is down in the in the 100s. So I'm doing really well here. I added my positions in the 600 range. I added at 2,500 on the drop. I added at 2,000 on the drop. Didn't get down to 1,500, so I couldn't add any more there. We're trading right now around 2280, 2289. This one looks much stronger, but I really want to see it get back above and close back above that 2244 area. We're above it right now, but I'd like to see us close above that for at least a couple more days, and then I think we're going to start to peel back north again for Ethereum. The other one I want to mention, I'm only mentioning it because everybody else is, and that's Doge. Let's take a look at Doge. I think this one is the alpha coins that we're looking at here. And what I mean by that is that, you know, you look up here, this was the Elon Musk event. Buy that rumor, sell the news, right? My son had some Dogecoin. He sold it at 70. He sold half of it at 70. Smart, genius move happening there on Doge. A lot of people were buying when he was selling. Look where we are now, 2309. We did have that big drop, but unfortunately what's happened is we've come back above, but we didn't stay above the 38% retracement level. So Doge looks like it wants to gravitate back down to become a teenager as a coin. And I hate saying that because I know there's a lot of you on here that love that coin. I'm just telling you what the technicals are telling me. All right. That's what we're talking about here. We're just talking about technicals. I'm not emotionally charged on anything that I show you guys. Right. So you're not going to hear me get all excited about one coin or another. It's not how I trade. It's not how I invest. I think that the lower emotion you have out there, the better of a trader or investor you're going to be. So, all right. Lynn Philippe, first time here. Glad to be here. Glad to have you on the program. And those of you, again, that are new, do me two quick things. Number one, hit that like button below. It helps support the channel. Number two, I do about 3 videos a week, 2 to 3 videos a week that come out. And I don't do them every day. I don't live stream every day. I don't want to regurgitate the same thing over and over again every day. There's plenty of channels out there that you can get that on. We don't do, you know, I don't have day trading stuff on here where stuff's going crazy and emotions are running hot. I never made money with emotion. You know, I'd rather show you the rules-based way that I do it and alternative strategies. But definitely subscribe if you're new, if you want to get those 3 videos a week that we do on a timely basis. All right. And then finally, if I were to just kind of summarize everything we've been talking about, guys, you know, I want to give this gift to you that are also brand new. I got an app out there that's downloadable on the Google Play Store, and it's also on the Apple Store. It's called the TG Suite. Now, to get to that, you have to go and do a search and type in TG space suite. When you find it, download it. It's going to have, when you log in, if you're a member of our tools, just use your username and log in. If you're not a member, go down to the bottom where the login is. It has a non-subscriber login. And once you fill that information out, you will have access to, now I've got 7 different buttons on here. I'm about to have another couple more because we're adding some more things on. But I got 7 buttons on here. These top 6, these are buttons that are available to our premium subscribers. But down here, I offer the morning report to everybody. And the morning report, if you click on it, is going to show you high volume optionables, high open interest options, unusual calls, unusual puts in terms of volume, the cheapest options that I'm following and the most expensive options that I'm following. Those are all available on the morning report, which is part of our TG Suite, and it's available to everybody. So be sure to download that and check that out. All right. The other thing I want to do is I want to kind of summarize a little bit of what we do here, guys. You know, so we talked about the overall markets. I talked a little bit about what I see going on in July. We have earnings coming up next week. I'm going to focus a lot on the earnings season when we get together for our next live stream, which is going to be Monday at noon. All right, so we'll be talking a lot about earnings. I'm also going to get into cryptocurrencies in a little bit heavier area because I really didn't see anything that was bullish, bearish, etc. But everything that we do, whether it's an overall market outlook, individual stock outlook, or cryptocurrency outlook, we revolve it around these 3 things. Number 1, we spot rules-based opportunities. If they're not out there, I don't take them. I like to let trades come to me. I don't go to the trades. Let the trades come to you. Number 2, is there a way of creating an alternative strategy other than buying stock that can still give you a limited risk trade, a high probability trade, maybe both? It's alternative to simply buying the stock. And then finally, we talk about planning the trade from start to finish. I showed you how to do that, how you do that today with USO, which was back in the beginning of the live stream that we did. All right, guys. So Hey there, how was the birthday trip? Hey there, it was bittersweet, and I'll tell you that I needed the time off, but let me tell you, of any place in the world that I could, of this country I could have traveled to, I decided to go to the hottest place in the area, which was in Central Oregon. We were 115 in the shade, and I saw 120 at one time. And we went out into we were in Bend, and we went into an area called Sisters, Oregon. I saw somebody here that's coming to us from Sisters, Oregon, and I happened to be driving around the big. It's our big matte black communications vehicle. You'll be seeing more of that because we'll be broadcasting from it on certain times. And I was out in Sisters, Oregon, driving this the beast around, and we were camping in it, but it was so hot outside, there was no air conditioner that could go into one of these things that could keep the inside cool. In fact, we were guaranteed 20 degrees cooler than outside. That's all well and good if the temperature's 90 or 95, but if you're 115 or 120, 95 to 100 was as cool as we could get inside the truck. So we abandoned half of our trip and hung out at the Marriott. So not exactly what I was looking for, but hey, I had a great time nonetheless. So thank you very much on that as well. But wow, that was, you know what? And you're right. Most of the year, we're talking about 70s as highs in Oregon and the Deschutes National Forest, and 40s for the low. And that's what I was expecting. But hey, you know what? You can only plan so much. Mother Nature is not gonna bend to what you're looking for. So, we met a lot of people. By the way, we met a lot of people that were also running into hotels because their own houses didn't have air conditioning. There were people that were there to go camping, to go fishing, to enjoy the outdoors, that were at Airbnbs that had no air conditioning, and they ended up abandoning them, getting to hotels. So, that's what ends up happening. That's what ends up happening. So, hey, same thing with trading too. I mean, you can't make stocks bend to your will, but what we can do is we can look for repeatable strategies. Patterns are what I like to call them. And then I like to go ahead and put trades on that offer me the lowest type of risk and or the highest probability. And of course, what we can control is we can control the entry. We can control the exit. We can't control what happens in between. But I like to follow patterns of consistency. That's what I do. That's what I teach. That's what I talk about. And that's what we're going to be doing on this channel. We've done it on this channel. We will continue to do it on this channel. So, everyone, I want to say thank you once again. Glad to be back. We'll be back again same time next week, Monday at noon. We do these Mondays at noon. Keep an eye on that video I got coming out on how to fix broken stocks, because we might be in a period where we might see stocks start to get a little broken as we head outside of the back half of summer and into fall. Thank you all very much. Have a great rest of your day, and we'll see you again soon. Bye now.